All right. Ladies and gentlemen, welcome
to
to
Alternative Asset Weekly.
to the SoFi Weekly, where we talk about Pokemon cards and gold. And no, I'm just kidding. But that being said, this was a big week, guys. There's a lot of news. NBA news, institutional buying news, short interest news, Kathy Wood news, all sorts of stuff. Celsius.
Yeah.
Got a lot of interesting topics going on here today. How are you guys doing?
SoFi's bank rankings as well. We'll add that to the list to talk about.
Yes. Yeah. I got that up. Steve, how are you, my friend?
I should probably take it off unmute. Great.
That's all good.
Steve. Yeah, we were just saying backstage, like we just remembered that Roy couldn't make this time. And we're like, oh man, we gave them Tanner and we took away Roy. We're going to get no views.
They're going to protest more than we are.
But I'm where's Riley? Yeah. So actually I'll just answer this really quick. So I think he's just taking a year off. He'll be back in April. I think that's just maybe the most simplistic way to answer that. But yeah, I don't think he'll be back till April.
He's been tweeting, recently.
Yeah, he has. Yeah.
Slowly back into it.
Some anti-AWS things or the fintech of AWS. Anyway.
You know what? I agree with that comment from Collision Man. If Roy's not here, let's just cancel tonight.
I know. No, he told us to go on in his honor. So
no, I don't think it's fair. I think
Steve is just like a fire hydrant of intrusive thoughts, just zero fucking filter. He just like whatever comes in.
That was too early. We're only 2 minutes in.
That is cursed.
Sorry.
Yeah. What's it called? So
I don't know. What is it called?
Do we want to jump immediately into NBA news?
Yes. Jump right into it.
Yep.
So SoFi Technologies had put out a post that I went online being pretty cocky, saying that I knew what their post was going to be about, and I thought that it was going to be entertainment tickets because SoFi's team had been talking about that. Well, it actually turned out it was probably much more important than that. They wanted to sponsor and end up actually sponsoring as the banking partner for the entire NBA. Not one team, not one location, the NBA. Hundreds of millions of views. We don't know what it's going to cost. We don't know these sorts of things, but a heck of a lot more eyeballs on SoFi. Tevis, what's your immediate initial reactions whenever seeing this news?
Yeah, I mean, I mentioned this where it just validates for me. Like, so you could have brushed off TGL as just being a small, market grab in the golf space and just saying, okay, well, it's not a big deal. Like SoFi Stadium is still the big needle mover there in terms of their marketing strategy. But now that they released this, in my mind, immediately it clicked that, oh, wait, sports in general is the backbone of their marketing and brand awareness strategy as a whole. NFL, TGL in golf, NBA basketball, probably as we consider future expansion for SoFi. I mentioned this in a video earlier today, where different sports have different concentrations around the globe in terms of popularity. For example, baseball would be in North America, but cricket would be in Asia. And so as a result of that, depending on where SoFi chooses to expand to next geographically, let's say Latin America, they might move into soccer or football next, right? Instead of American football. And so that's always going to be a hand-in-hand approach with regards to their future expansion, especially now that, SoFi Stadium is bringing so many different sports that are being hosted there, Olympics, the World Cup, the Super Bowl. So there's multiple different audiences. And so Anthony Noto was on Yahoo Finance talking about this. And he basically said that, their entire strategy with the NFL were I mean, we've heard this before because he's talked about it, but he said it very clearly. The entire strategy is around the impressions for the primetime games. And what they do is they run ads during those primetime games. So not only can they see the logo, they can also hear what the brand message is about, what the brand stands for. And then in future games, let's say the next night, they run ads again, because he was saying that it's the same audience that comes 2 nights in a row, 3 nights in a row, even though it's different teams that are playing, they'll come to the events. And I was just thinking to myself, wow, like this is a winning strategy that we've seen new member additions. We've seen the unaided brand awareness go from 2 to 8 over the course of 5 years. And now they're just doubling down and tripling down on the sports approach. Basketball gets far fewer viewers than the NFL does in the States. But yeah, B-dubs, I totally agree. This is how they get to 1 million members per quarter. This stuff adds up. And again, if you want to associate the SoFi brand name with sports, Anthony Noto also shared some thoughts around the entire future of sports viewership in general over the next several years and how that can expand. So I think it's very bullish, to say the least, just to extrapolate this out and see where it can go. Obviously, my next question that I had in my mind was like, how much do they pay for this? But obviously, if we're keeping in mind that consistent profitability every quarter from now and going forward, then we have to take that into consideration as well. They're not breaking the bank on this for one quarter if it means that they're going to lose profitability or that sustainable growth forward. So those are my two initial impressions. It's like, okay, well, we got confirmation of this strategy. What's the, where next? What's the, big vision here? And then the second thing was, okay, back to dollars and cents. What did this cost us?
So take it a step further, and people complained about when they did this naming rights at SoFi Stadium. It has turned out to be very powerful for the company. SoFi is now profitable. I don't think that they would have done a deal that would have hurt the brand. 1. 2, Noto gave us very forward guidance. He didn't just guide for 2024. So they're building it into their models. So I'm not sure there's much to worry about there. And think about the cross-pollination, and think about how sports is much different today than it was in the 80s and 90s and early 2000s, because you're not just seeing highlights on SportsCenter. You're seeing highlights on SportsCenter. You're seeing highlights on Twitter, Instagram, YouTube.
Do you want me to play that clip, by the way?
You're going to see that SoFi branding all over the place all the time because of this. Highlight videos. It is going to be immense. Why are you laughing? Why can you never keep a straight face?
He reads too many comments.
You got to accept it, man. Just focus. I'm entertaining the audience. You talk about the important stuff.
Oh my God.
Do you want me to play that clip though? I have it up of Noto talking about the sports strategy and why he believes.
Yeah, sure. That's a 7-minute clip though, so you gotta.
No. I've got it on a timestamp. We're just gonna listen to the girl's question. I don't know the analyst's name, but the female Yahoo question, and then just his immediate answer. Then I'll turn it off. I think it's a 2-minute answer. Anyway.
I wonder if you can put your hat on as former NFL CEO to talk about what the sports landscape is like right now. We're coming off of a week where we saw some big announcements coming through on sports streaming, specifically with the bundle with Disney as well as Fox and Warner Discovery. It feels like we're looking at a really fragmented landscape. And I wonder from the league perspective, what you think the viewing experience is likely to be like.
I actually think it's a golden age for professional sports, college sports, and live sports generally. It's a golden age for them because for the first time, they're occupying over 90% of the most popular shows with the largest unduplicated audiences. The fact that the National Football League during primetime Thursday night, Sunday night, Monday night is still aggregating over 20 million unduplicated viewers in one sitting is incredibly unique. You have to go back to 2005, 2006, when a broadcast show had that size audience on Thursday night going into the weekend where big auto manufacturers and alcohol producers would want to advertise in front of those weekends. Those audiences cannot be reached through linear television. Similarly, they cannot be reached through streaming. And the sports content is going to be the fuel that drives the growth of streaming, just like it was the fuel that drove the growth of the technology for video, broadband video as well. What we saw is the evolution of different platforms. You have the cable platform that was paid television. After we had free broadcast television, sports helped drive the adoption of pay cable television. And then it helped drive the adoption of satellite television. And then it's helped drive the adoption of mobile. And now we're in a period where it's going to drive streaming activity. And you see the emergence of these huge platforms with large audiences starting to pay for live sports for the first time, whether it's Apple or Netflix or Amazon or YouTube. They recognize the value of that content, and it's only going to increase in value given its large unduplicated audiences. It'll take a transition. It'll take a transition for the companies to figure out how can they economically afford to pay these prices in the streaming model, which is very different than the pay cable bundle.
Anthony,
I'll wrap it there. But yeah, he's definitely done his homework.
let me throw something up just to sort of build on that point. This was like the Super Bowl was recently. Elon recently posted this around X's numbers specifically. And I just want to say, one of the reasons why this is a winning strategy is with regards to that virality of the content, right? You always have a call option on interesting things happening, viral clips happening, buzzer beaters, last second plays. Just the Super Bowl alone, 10.5 billion impressions on just this one platform, X. 19.2 million posts, 1.1 billion video views. And then you think, okay, let's extrapolate that out across all platforms, across TikTok, across Instagram, across, whatever. And then let's also add on top of that, like the word of mouth that happens. And then the fact that a lot of these clips are evergreen content. Like, do you ever go back and watch, Mike Tyson's best 20 knockouts? I do. And so my point is, or like Messi's top goals or whatever it may be, that brand is always going to be there, and that brand is going to be amplified online as a result of all of these impressions. So Noto might be talking about it from a primetime sports cable perspective as well, but I think the other layer to add on top of this is social media, and is that virality aspect of all of the interesting plays that might happen that might get just shared and reshared, especially in the NBA, because it's such a faster paced game in general versus the NFL. Let's say, like the NFL, you could have a great pass or a great touchdown, but I would imagine that the NBA you would get, and again, this is just me imagining, but multiple higher
way more highlights.
Exactly, right?
Breakaway dunks, just so many more highlights in basketball. And look, it's brand awareness. It's getting the name out there, having it associated with things that people look at all the time. I mean, and even though newspapers is becoming a thing of the past, think about traditional media and also traditional websites such as Yahoo Sports, all the people that go to ESPN.com. The brand is going to be in the pictures all over the place.
And one other thing on top of that, Steve, that I even added on my post was like, this also applies to NBA 2K. Like the versions of the video games,
yes.
They have, and franchising and all of the, accoutrement that accompanies this entire industry is going to have that SoFi name everywhere. And so it's just absolutely huge, because while you might make a deal for those prime time minutes, all of these other things is just a giant cherry on top of that cake.
Yeah, I'm very bullish on this. And look, my big fear is that SoFi gets acquired. It's becoming more of a fear now more than ever. And I think over the next year, I just don't want to see it happen.
I don't, honestly, I don't know why. I just don't think it's going to happen. The M&A has been really small lately, and that might change, but right now it hasn't been seemingly the case so far. One thing I will say, and I feel like I'm always the Debbie Downer of the party, but I don't just want to make this a, pat on the back for everyone.
Yeah, but Tanner, you got to remember, there's several financial institutions that could just write a check.
Yep, definitely.
If they wanted to acquire growth. It's happened before, it could happen again.
Look,
I-
I think that
I completely agree. I just think, you know what? Wells Fargo is more focused on their buybacks. JP Morgan is just announced so many, I think it was 3,500 new branches. Like, I just honestly think they're not focused on the areas that SoFi is focused on. They're looking past what I believe will be the future of banking.
Yeah, but it doesn't have to be one of them. Just Morgan Stanley acquired E-Trade. You have Charles Schwab acquiring TD. There's
Yeah.
other places that could acquire them in the future. I'm just saying that it's a possibility that I don't want to see happen. That's all.
Yeah, no. So there was a comment that said that said that I didn't like this announcement at first. No. I liked this announcement. The one thing that I'd say is that we don't know how much they paid, right? It's essentially paying for advertising. You can put they could have taken that exact same spend and put it somewhere else, and it would have been potentially reaching 100 million people as well. I'm not saying that that I'm anti this. We just literally, no one knows how much they spent. So if they come out and say this is $1 billion campaign, a lot of people are going to have different feelings about, this outcome. So I don't want to pass ultimate judgment saying that this is an unbelievable accomplishment when really it's money for views.
Yeah, but remember, you have an advertising budget for that exact reason, advertising.
Yeah.
As long as it falls within the parameters of what they were willing to spend for advertising, this could be a home run because that money would have been spent anyway. Look,
Yeah.
I know somebody who took his entire advertising budget and has a suite at a specific stadium. For the simple reason, instead of taking out ads and doing this or doing that, he builds personal relationships with people over sporting events and going out to dinner, and that's his advertising budget. Works very well for him. This is probably a very good move that transcends one-time ads.
Yeah.
And they've spoken about how that's working better for them than traditional just running ads, right? So I honestly think if there is one team that a management team that knows the sports area, like I'm full trusting in SoFi, but it's not like I don't know.
Well, I think also like just calling it money for views is a little bit discounting. It's cheapening that experience a little bit because look, we just had the Super Bowl. Everybody did Super Bowl ads. That was a one and done type of advertisement. Like you had what was one of the ones? Duolingo had a really cool ad, which was off the beaten path. Kanye had just himself recording himself in the car, and it was kind of cheeky, saying, "Oh yeah, we spent all of our money on getting a spot here. It cost $7 million, so I don't have any money left for a budget." Like obviously they do, but that was just like guerrilla marketing, right? So, but the reason why I say it's cheapening the experience is because yes, it is money for views, but at the same time, it's associating their brand with their mission, right? And they've been doing that all along. And once you do that, it gets people more bought in over that long-term vision. People know what you and your company stands for, and they know what your product values essentially are. And I think that's a much better delivery method of those values, that long-term customer, than just having an ad, right? And so, the NBA, I can't remember, was it you or somebody that were, well, even Anthony Noto mentioned it in the Yahoo Finance interview, saying that, hey, look, our brand really is tied to what the NBA sees. Like there's parallels in terms of our values. And also with the Jason Tatum partnership, they were talking about this generational wealth fund. I saw on, there was a clip with Jason Tatum on CBS this morning or something like that, where he was talking about, being in a household with a single mom and how a brand like SoFi could have been really helpful for him. And then Anthony Noto was talking about that in the Yahoo Finance interview as well. Like there's parallels because of his upbringing, so on and so forth. And I just think that those things are so much more, ephemeral than just a one-off ad. They're so much more deeper than that because you sort of have a emotional connection to the company. And that's something that makes Apple a complete cult. That's something that makes a lot of these sticky brands sticky. It's their mission-driven approach. And it's the fact that they can invoke emotions in their users to make emotional decisions to buy them, right? And so I think that having this one-dimensional lens to say it's money for views, while it's true, it's also very you'll miss a lot of stuff there.
Sorry, dude. There's a comment.
We're both laughing at the same thing. I cannot believe Matt just said that.
Yeah. he just tries to get Tevis to laugh. But yeah, no, I honestly think, like truthfully, that this management team knows what they're doing. I totally believe that this is the right move for their company. I think that they're going to align themselves more and more with sports. And it's probably a great time to do so. And it was actually Noto DM'd me to say that it wasn't just about money. It was also about, aligning interests.
Can you not say that, please?
What, that Noto DM'd me?
Yeah, don't say that.
That was the first time he DM'd me. I'm not like hiding. It was the only time.
You're a pair of this podcast when the only time the CEO DMs you is to basically put you in your place.
It wasn't, honestly. I'm not trying to call out like Noto and say that he's wrong on that. What I wish I reworded my message was that I said any company could have gotten a sponsor with the NBA. That's not true, right? I think what he was trying to say is, like, if you're a tobacco company throwing up a ton of money, they're not going to sponsor, or they're not going to put them up on brand, right? Like, you guys probably, like Tevis, even just running a YouTube channel, you probably get emails all the time saying, can you promote my crypto company? I get them like
small mining penny stock.
I get them a couple times a week. Those don't align with the brand, but that doesn't mean that if Wells Fargo came to the NBA, that they would say your company does not align with the NBA. I mean, I don't know.
But yeah, so I guess my next natural question is, why haven't they? Like, let's say you're Wells Fargo. Why haven't you gone to the NBA? Because if this is a proven model to say, well, actually, you can get a much cheaper, like the customer acquisition cost math makes sense. You can get a much cheaper user for the amount of advertising dollars that you're spending.
There's a very simple answer to that.
Well, I think just to finish that thought, Steve, where I wanted to go was the reason why is because I don't know, maybe this is a very naive take, but I think all these companies want to be cognizant of their brand approaches and what they want to associate their brands with. Like SoFi has that sports background, and it's reinforced with every subsequent sport that they go in. And so it makes sense for them and their brand. It might not make sense for Wells Fargo's brand.
But you're assuming that Wells Fargo and these people have marketing officers and advertising officers that are part of this next generation that understand how things go viral. Let's not forget, Anthony Noto was the CFO at Twitter. He understands social media probably better than most people working at any of these other banks.
Yeah.
And his team probably understands social media and how to get things to go viral and how to have lasting impressions better than most of these other banks. And
Sure.
They're building a strategy that is much different than these other banks in their advertising model.
Yeah, but Steve, Wells Fargo has 240,000 employees. Of course, they have marketing officers that are young, that understand virality. It's just their ideas never get, pulled to the surface because they're executives. Just statistically speaking, man.
I mean, we don't know that.
I mean, they're hiring young
change
people.
The fact that the person running SoFi used to basically run a social media company. Like, you're not beating that. I don't care who any of those executives are or any of the middle management.
Right, but we're saying the same thing. All I'm saying is Wells Fargo could very well have people who are smart and understand viral marketing and then understand TikTok, but those ideas never get floated to the top because the executive branch is so set in their old ways, whereas Noto is in the executive branch and understands these things.
Or they didn't bid high enough. Like that's what I mean. Like, we don't know. But that doesn't excuse the fact that I do actually think that that this is done very well. I think that this will do very well. I think that there's a higher chance now that SoFi does break 1 million new members a quarter this year than ever before this partnership, right? I think that this is this
the most
plus
bullish thing you've
TGL.
ever said.
Sorry,
That's the most bullish thing you've ever said about SoFi.
that's not the most bullish thing.
We're gonna clip it.
We're going to clip it.
I think that people don't like just trying to see from the other side. If I say anything that's remotely just trying to see from both sides, people are like, he's bearish. I'm a super fan of this company. And
you and Gary Gordon
don't sound like it.
yeah, you and Gary Gordon agreed on too many things. That's how we know you're bear. No, I was going to say this plus TGL next year is really showing a massive pipeline of potential new members. That's awesome. I'm loving the space that we're going into at 2024. Even Robinhood says that they're increasing their sales and marketing spend. So, companies are like, sentiment is changing and is switching back to growth mode. And although growth mode might not be the most profitable thing, it can really bring up valuations at certain times. So, I'm very hopeful.
I know a lot of people don't necessarily care what ARK Invest does, but Kathy bought a lot of shares the past 3 days.
Yeah, let's jump to
Yes,
that.
she does.
A lot of shares.
So let me tee this up. At the start of this week, ARK Invest had around 2.4 million shares ish, around that area. Their average buy was around 300,000, 500,000 shares. On Wednesday,
Wait. Then she added 250,000.
Then she added 250,000 to ARK. Except this was also the first time ever that she added to ARK K by a marginally larger amount, 1.8 million.
Yeah, I don't know if you can see that, but
her first purchase, and this was on Wednesday. And so, well, actually, no, you're looking at
no. This is today's
numbers. This is today's numbers.
Oh, I didn't even see this. This is new news to me.
Yeah, man. This is.
Yeah, she made 2 big buys today.
Tanner, you're messing up my flow, man. So
I was going through your tweets, man.
Yeah. So go down. Okay, there you go. So that's yesterday's purchase of ARK F and ARK K, 2.5 million shares. So on Wednesday, they bought a total of 2.8 million shares across both funds. Today, they added, from 2.4, they bought 2.8 million only on Wednesday. Today, they bought another 2 million across both funds.
I didn't even see that. So they tripled down.
Basically. So I think, according to Kyle, he was just saying ARK Invest is now the 6th largest institutional holder of SoFi, and it only took them about 2 days to do that. So,
yeah, Tevis has got some real spice to him today. He's mad or something. I don't know.
No, it's that Celsius he's drinking.
Yeah, he's lit up.
Could you start drinking some Starbucks so I can get some dividends, please?
Dude, I am getting paid by this company. I posted today, and I was just saying my call options for just the past day alone have paid off for the cases of Celsius I'm going to have in the next year and a half.
Nice.
It is what it is. I think we're going to have a special guest joining us momentarily, Tanner.
If it's only a year, you probably want that even more because it means that you're drinking more Celsius. Is there someone in the thing right now?
There might be.
You want to send me I actually probably know who it is. Oh my God, that is not who I thought it was.
Who is it?
Yo, I'm so excited right now. Okay.
One of 3
gentlemen, please welcome Kyle from the Stock.
What's up, guys?
Dude, I thought someone else was coming. How you doing? Hey, Kyle?
Come on, there's no way I got a lag right now.
No, can you hear me?
Yeah, I can hear you.
You got a big lag.
delayed?
Am I lagging?
Yeah.
Am I lagging?
Yeah.
Maybe. I don't
not
know.
anymore.
Okay, I just hardwired in today, so.
Well, how you doing?
What's up, guys? Pretty good.
Good to see you, man.
What have y'all been talking about?
So we just covered the NBA news, Kyle, and then we were just jumping into the ARC news right now. But maybe if you have some thoughts on either of those, feel free to take it away, sir.
Yeah, so I actually did play a lot of basketball like back in the day, but I looked up the statistics on like what the NBA is doing right now, but I guess for some reason, I don't know what it is, but it looks like playoffs are at a 10-year high on viewership.
Oh yeah.
10-year high. Yeah, like out of nowhere. All-Star weekend though, for some reason, which is coming up, it's not doing that well. Like the ratings for the All-Stars are really, really down, but the playoffs just seem to be extremely high. Like 5 million viewers per game or something like that.
And in this upcoming one, SoFi's branding is going to be on the immediate tournaments, if I remember correctly. Is that true? Why is my exposure?
Yeah, if we're talking like on the court, like a big sticker, I mean that's going to be absolutely insane. Like all these NBA games, we get a big sticker.
Is there going to be on the court? Because I know they said virtual signage, so I know that it's going to be on the TV for sure, but I don't know. I hope it's on the court as well. I assume it probably will be, but yeah,
definitely want a sticker for sure. That would be crazy if they do that.
Get your money right.
So I got a question for Kyle. What do you think this does to the shorts? If Kathy's basically backstopping it right now with 5 million shares in 3 days. And then you have this news, and you're going to have more brand recognition, more people aware of this. I mean, at what point do the shorts get worried? Because you can't feel good about this if you're short SoFi.
Yeah.
I said I think SoFi's up for world domination when they start clipping that million member mark. Like that's going to be real serious when they start hitting that. And I think maybe Q4, like it could happen.
Q4 million members.
Music to my ears, baby. Music to my ears.
Or yeah, like it's just growing. Like even my friends that aren't even into stocks and stuff, it's weird. Like they're starting to like hear about the SoFi now with the basketball, and they say, "Hey, that's the stock you've been talking about for 3 years." I was like,
Dude,
"Yeah, there's."
It's crazy. I saw on X people who were commenting on Jason Tatum's announcement saying, "Oh, I just opened an account thanks to you. Like, thanks for bringing this on my radar. Like, you're the best. I love you," kind of thing, like fans. And I was just like, "Whoa, already that's happening?" It's just really cool to see.
Those are Q1 numbers, baby. Those are Q1 numbers.
Yeah, the only thing like for SoFi, I think like that guidance that Noto put out, like going over the 50-50 split, I just think the analysts just took it the like way the wrong way. Like they're putting it down to like the nearest penny, copying 2023's revenue. And that's why if you look on the Yahoo, everything's updated. It's at 16% growth. Like that's what they're looking for. Yeah. So I don't know if Noto just did that to beat it by 10% this year, 26% growth, or things get crazy again, over 30 again. Like, I don't know if we're going to see 36% growth this year, but I mean, I'm looking for like 26 to 32. Well, I'll be blown away if they do that again. Because everyone always says like this macro. I've been hearing this macro for like 3 years. It's like, okay, so if I accomplish 50% growth, 60% growth, 35% growth the last 3 years. So like, I think it's, they're getting the hang of it, but I think they're gonna feel out Q1. It was real soft guidance. I just think they're gonna feel it out. Got the new partnerships kicking in with the NBA, and then if they actually get a rate cut, I don't know when. I'm not giving it a date, but like that's gonna like give them a flip on which product they might go after. What if they want to go all in mortgages from June to December because there's 2 cuts or something? What if they go on mortgages?
Yeah,
you never know.
I found it funny that you said, we've been hearing like this environment for like 3 years. And I think Noto sort of nailed that sentiment in the Yahoo Finance interview to show the versatility of the company, where he said, back a couple of years ago, we were 96% lending, and now we're going to be 50-50 split. Like that shows this amount of flexibility in any rate environment that they could be in, that this company has what it takes to thrive. And
Yeah.
it's a very bullish thing.
Yeah, with the analyst reports are truly following SoFi as closely as they could be because of these exact reasons. You know, the macro is actually the bullish case for SoFi because this is once again a company that had a hand and a leg tied behind them, and they continued to manage their way out of a situation that most management teams would have crumbled through. And they continued to innovate and bring new products to market. And now this is going to be the first time that we see all cylinders firing at the same time. I mean, we have not seen this yet.
It just seems like it feels like they're not even worried about student loans right now. Like, you know what I mean? Like after seeing the decline in originations, it's like they don't even care. It's like they're just waiting for it to come back. They're not worried or anything like that. They have so many different avenues now. That's what I really like. It just keeps expanding. I just feel like they just see the quarter ahead of time, like where to go, like where to hit the numbers, like let's pump up the personal loans, let's pump up the student loans. And then mortgages is, that could be a 10x from here, and they're originate. What are they at? I forgot what it was at, 100 million or something like that.
Something people need to remember is if you haven't seen the very specific speech by Noto at Stanford, you should go watch it. It'll give you true insight into what he is doing. The speech is from probably 6 years ago at this point. And when you really listen to what he said, it's exactly how he's been managing SoFi, and it's probably how he's going to continue to manage SoFi. His competitors better be worried, and the shorts better be worried. And look, we all could be 100% wrong, and things may not work out, but I certainly would not want to be short right now.
One of the things that I find is really cool too, talking about diversification, by the way, is this is right now at 3 segments of the business. Whenever we add on like a 4th segment in terms of business accounts and, business lending and all of these things, this is the beauty about financial services companies is they're extremely resilient and diversified. And so Noto has already proven, even back whenever they only had student loans, as that sort of product was getting dropped off by, Trump putting the moratorium on, they put out an entire financial services side of the business, launched that practically just through 2019, 2020, have made major improvements during then, multiple new products to come. There's only going to be more diversification for the next time that there is a bad macro environment. A bad, sort of hardship for the company, whether that is, further unemployment or some sort of blockade to one of their products like crypto, for example. There's always going to be new avenues for SoFi to go down. So absolutely amazing.
And I mean,
I also feel like once you start to learn more about the story and where the company's headed, you actually enjoy like holding the stock month to month. Like it's actually becoming like kind of fun. Like even though you got the crazy volatility, you just know every single quarter you're getting closer and closer to like what I personally see in, like, I don't know exactly how many years, but I just see like $1 billion profitable quarters. Like that's what I see, like them hitting $1 billion, not $1 billion full year. I'm talking like maybe 2029, 2030, you're talking $1 billion net each quarter. Like that's, you're starting to get into like what Amazon, what did they just do? They just did a 10 billion net profit in their quarter. It's a compounding effect.
I think that the tough thing about holding the stock right now or during this time period is that, sometimes you can get discouraged by what seems like manipulation or whatnot. But the thing that I want to say is now that profitability is in the bag, now that we're getting these like serious partnerships and to Steve's point, everything is firing on all cylinders. You have people like Cathie Wood who are doubling and tripling down on their position. You have more institutional ownership I mean, people in the chat are saying, we just crossed 40%. And so you will have less volatility over time throughout this year and beyond as a result of that, because you form a heavier base in the stock and it allows it to make a next move up. And then just the last thing I'll say before I hand it off to Steve is, as we get more consistent confirmations of that profitability, next quarter profitable, the quarter after that profitable, like a lot of the sentiment is going to change from these analysts who are saying sell today are going to change their stance to either hold or buy, because those same underlying institutions, the banks, the large players, are going to be building larger positions in the stock, thereby increasing that institutional ownership even more. And so it's going to find its footing very quickly.
Another thing I noticed, I know when I post the Bank of America, the updated holdings, the Wells Fargo, I know it's not the bank that's betting on it, but what'd you guys say it was, for their investors, their clients? That's what they're
custodians.
Custodians. Well, it's crazy. I just did the top 15, and this is kind of crazy. Top 15 institutional owners. Bank of America's not in it. JP Morgan's no longer in it. Wells Fargo's not. They all trimmed or sold. They're all gone. It's crazy. None of them are in the top 15. The only one that's there is Charles Schwab in the top 15. No other. I didn't see any banks in the top 15. They're all gone. I like that though. It shows
sure enough, right?
Almost like they're just messing around to being able to give a price target, act like they're got shares to give a fair price target. Everything is hold on the banks. If you notice, they're all hold. They've been hold for 9 months straight on their price targets.
Yeah.
Steve? Bring up the screen again. And so Seeking Alpha just updated the forward earnings. 7 analysts are predicting 52 cents for 2026, which is Noto's low end of the guidance. If that does come in, if it stays on the low end of the trajectory, you have 254% year-over-year growth in earnings in 2025, then 118% in 2026. And SoFi today is trading at 16.3 times 2026 earnings. That is so super cheap for the amount of growth that this is going to experience. And if you put that at 80 cents, what is that? Probably 11 times earnings for 2026 or so. That is so cheap for forward growth. And that's assuming that Noto and his team don't outperform. And the one thing we know is they outperform all the time. And they sandbag all the time.
If we remember from 2024, they had 5 cents before. That got raised because it's the low end of SoFi's guidance. And if they're going to continue to raise, like you said,
how many times did they beat and raise in 2023? I think we got 3 raises for the year, 4 raises
every quarter.
I mean, it's just, you're looking at
if you looked at my net income, I said 36.
Yeah, I mean, look, you're looking at a
million on that net income
that doesn't fail. You're looking at a management team that continuously comes out, beats and raises guidance, and they don't get it wrong. And the stock is not getting loved, which is fine. I'll just keep buying more shares. Fine. I can outweight everybody if I have to. I don't care. I will just buy more. And look, I could be wrong and it will suck. I don't think Noto's the guy you bet against. I don't think this management team is a management team that you bet against. And when you look at the charts from their member growth, that's one of the most important charts. Take the financials out of it for a moment. I don't care what I think. I don't care what the analysts think. I care what the members think. And if the members continue to grow and the assets under management continue to grow and they get more bank deposits, that means that people value their product. And if people value their product, and if they keep getting more direct deposits, it's more and more people that are sticky clients. And that's what we need to care about, because guess what? They're the ones that are voting with their wallets. And that's the biggest thing. We're not seeing people saying, you know what, this is a horrible product. We're going to Bank of America or we're going to JP Morgan. We're not seeing that. And that's what ultimately matters. And that's what's going to drive everything else, because
Yeah.
it's going to drive word of mouth.
Yeah. Product differentiators matter the most. Users matter the most. The analysts don't matter. You know, that's one thing also that was brought up in the chat a couple times. People were talking about institutional ownership now being above 40%. I think before it was hovering quite close, like 38%, something like that. Honestly, I don't know about you guys. Maybe you guys have a different take on this. I wouldn't look too far into that. That also can include short interest as well. And that's at all-time highs right now. So because that's, institutional ownership is climbing, doesn't necessarily mean that, there's a higher percent that is actually long. The best way you're going to see a higher percent of long investors in SoFi is the stock price is going to be higher, which it is. It is actually done pretty well. I mean, we're at 850 something right now, which, we're out of the 750s for sure. And people discount that a lot. But
And I'm so interested to see the short interest numbers when they're updated in a couple of weeks, because the last number is our all-time high short interest. And I want to see where it goes from there, honestly.
yeah.
This is what I want. Somebody who is negative on SoFi, I would love to have a conversation with. I want to see what I'm missing. Like not some person, I'm not going to name any names, that doesn't understand the company or didn't do any research. I want somebody that actually has done the research and actually understands the company and the sector to please convince me that this is a company that is going to fail. And if you can convince me, I will sell every share.
You guys want me to? You want me to connect you with a couple of guys? I know a couple of guys.
Did you see the Gary?
I will talk to anybody except for that one person who obviously does not know a single thing about the company.
That's the Bears, bro.
There's got to be bears that did the research. There has to be.
Dude, they wrote 20
20
articles. They wrote 20 articles saying SoFi can't sell loans for 12 months. Like, that was an article. We saw that 20 times. SoFi can't sell loans for a year.
Look, I could be 100% wrong, so I would like to know why I'm wrong. And if I can be convinced, I'll sell my position. But I can't figure out a true bear thesis that makes sense. Like, I need help with this.
Yeah. Yeah.
And I'm willing to admit that I'm wrong if somebody can convince me of that.
I think, honestly, I've said this many times, so I might be repeating myself a little bit, but I think it's important is whenever you look at SoFi comparable companies that are in this loan selling game, a lot of them had severe troubles, right? I don't know if you guys remember those famous articles titled like SoFi, the last lender standing. Like, it was all the earnings had come out and it was only SoFi. And then people had predicted that next quarter would be the quarter that they'd actually start to falter and defaults would get way too over their head. And then it didn't happen. Like, I think the hard part about comping SoFi is that they're not comparable. They are a standout company, and that is really important, right? And if you're trying to use traditional banking metrics, SoFi will not be as good on, return of equity or return on invested capital or these sorts of things that, bank investors like to lean on. And then on the other side, they completely discount new member growth, revenue growth, all of these things that are potentially growing way faster than traditional banks.
I think that they're also not taking into account the amount of diversification that SoFi has, that even if, and look, the only bear case that makes sense to me is one that is not singly targeted at SoFi. It's applicable to everybody in their space. And that is unemployment going up by 2 or 3%, tremendous defaults across the board, but that's going to hit everybody. That's not just a SoFi thing. And if that starts happening, chances are the government's going to step in, the government's going to print money. Like, there are going to be things to stimulate the economy. You'll get very quick rate cuts to try to even things out. So, I want something other than the obvious, because the obvious is negative for everything. So I want something else about SoFi's actual business not being good, not a what if scenario about unemployment going up and more people defaulting on loans.
Well, I mean, if unemployment goes up like 2%, then you'll be right in line with SoFi's guide, and then you can
That's
talk
another
to
thing.
all those.
They're very conservative with the numbers that they forecast for in their models. And I've said that so many times that they have pretty smart people that are making their actuarial models, and they're falling on the very low end. They're nowhere near the high end of what their acceptance level is.
Yeah. Yeah.
So let me bring up something and maybe we can chat about it. Are we concerned going forward now that the company is profitable about the sandbagging? Because that works until it doesn't. And then you start to train the user behavior of the market to expect you to beat every single time. And if by any chance you come in line or you don't beat, you're going to get punished doubly hard for that. So how do they get out of that cycle now that they've trained the market for 2 years where they've triple beat?
I think they gotta wait for the stock to go up a little because there's no room for error down here on these earnings at all. Like if the stock's up like $25, they could start letting loose a little bit on guidance and stuff like that because bad earnings is gonna take you down. Let's say you're at 25, 20%, you're back at 20. You know what I mean? Like they just can't have a miss when we're at going into earnings at a $7 or $8. The stock goes down 25, 30, and we're back at $5, $6. I feel like they just know like the error is just so
And short
small.
interest has to come down to probably mid-single digits mid-single digits, because if you have short interest at 12 to 16% and you miss a sandbag guidance, you're just going to have more and more shorts pile in. You can't, especially with, like Kyle said, with prices at $7 or $8. I mean, that becomes a real big short target.
Someone said in the chat that the sandbagging isn't done by Noto. I mean, SoFi does give out their own guide, and they do sandbag it. Like it's not that it's all from Wall Street. I mean, there is sandbagging in house.
No, it's not just from Noto; it's from LaPointe also. It's from the two of them.
No. Sorry, but when I say Noto, I mean and team. Obviously, it's
Yeah,
not
I mean, look,
two
they
guys running a
sandbag. There's nothing wrong with that.
Well, there is something wrong with that because if you're sandbagging, you're setting yourself up to always beat and raise, and that's all well and good. But now that you are profitable and you're going forward, yeah, it's no surprise why analysts think you're going to do 6 cents or 5 cents the entire year because you're sandbagging and they're taking you at your word. So if you're actually genuine about your guidance and you don't beat and raise every single time, then you set a higher baseline for what analysts can have for expectations for you that's more realistic with what you'll actually report.
Just to go on so people are saying that every company does it. That's not true at all. Not every company sandbags. Not even every company gives guidance. So not true. But I think that I don't actually believe the idea that stocks are based on beats and misses. Like I think that if they came out with a very strong, truly in line with what they believe guidance for next quarter after they report Q1, that the stock would run so drastically because, EPS targets would change, revenue targets, all these things would change. So I think that the stock would run. If in fact they end up missing that slightly, then the stock would just get pulled back to where it is. Meaning, maybe we go from 8 to 10, they end up going in line or below and end up not keeping that beat streak. It goes back to 8. So I do think that at some point, continuous sandbagging can just be a hamper to your stock because no one wants to give you that multiple.
I'll be honest. This quarter, the Q1, they sandbagged it. Because you got to think they did 593 revenue, and they're guiding for 550 to 560. And when they do that little guide at the beginning of the year, they usually only beat it by 20 max. So if you're at 560 on the top end, you're going to hit like a 580 if you do what you've done the last 2 years. So this will be their first quarter ever where they haven't hit a record revenue quarter over quarter. You know what I mean? They'd go from 590 to 580 if they hit their normal 20 million beat on the top end. So that's why I put a video out a couple of weeks ago. I was like, guidance is soft.
They've never decreased quarter over quarter.
Yep, ever. So that's what I mean.
It's a very different quarter though.
Because the jump was so big. It was their biggest jump ever. It was 63 million Q3 to Q4.
Yeah,
the biggest ever.
If originations are going to slow, that's where they see a lot of upfront costs, right? So I don't know. The one thing about the way that they do their lending is without having to write off their loans immediately. It's a massive upfront earnings for them for originating new loans. So they can continue to pump out massive revenue beats with loans. If that starts to slow, who knows? But then again, just because they say lending is going to slow doesn't actually necessarily mean that it will happen. That's on very conservative guidance. We'll have to see how the year plays out. But yeah, I'm not even in SoFi. It's like selling off Apple if they've had a bad quarter or a bad year. And I don't even think that SoFi is going to have a bad quarter. But like, I think that this is so much more of a longer term play that I do think that this is, a potential massive bank in the next sort of future of banking, that, for them to guide for 2024 slower originations does not tell you the whole picture. Anyway. Do we want to talk about SoFi's consolidated assets ranking? Huh? Some fun stuff?
What is the ranking? I didn't see it.
75.
They moved that much.
So they went,
75 spots.
they went from 80 to 75. Where are they here? SoFi Bank. I think they were at 21 billion. Now they're at 24 billion.
Yeah, 21 and a half to 24.
Yeah, it was their smallest, I think, in like the last year. It only went up 2.5 billion.
Now,
Yeah, I mean, they're going to plateau, right? Because as they go bigger and bigger, then the numbers just get astronomically big, where this is by assets, right? It's not like by market cap or whatever. Tanner, if you can throw that up.
what is this?
This is the ranking over time.
Yeah. Did you see what Vadim posted on Twitter?
No.
Okay.
I
Show
don't
this,
even
and
know
then
who that is.
I want to show you what Vadim showed because this was quite interesting.
Yeah, so all I want to say here is like if you see the jumps from 450 to 240, so on and so forth, like this number is going to get smaller as these assets get larger because it's harder to gain more slots. So the expectation has to also be paired a little bit. You can't just expect this linear progression for them to be like, oh, at this rate, we're going to be a top 10 by next year. It's not, that doesn't work like that,
You can, if you add business banking and you add asset management, you can expect linear progression. Without those, it's going to be very hard to get those big jumps.
Yeah.
Let me throw this up. Bear with me.
Yeah, they can hit like 55.
So Vadim found that in terms of actual new assets coming onto the platform, SoFi actually ranked 13th on the list. And so, although
on an aggregate basis, which is crazy because their base is so much smaller,
is tiny. Isn't that crazy? 13th. Incredible. Anyway.
Yeah, I think I did a video and I said like if they just maintain this, they'll be at 55 by the end of the year. It's not bad.
what do you need for 55? Like 40 billion in assets, something like that?
Just like a 3 billion jump each quarter, so another 12, so 36.
Yeah.
I think.
So I think my forecast for the end of the year, like one of my things that I had at the beginning was 60th.
Yeah, it might have been a little higher. I gotta check. It was like 55 to 60. Yeah.
What else?
What is the other news? Sorry.
Tatum's going to work on Twitter already. They're putting
I
him
saw
to
you
work.
posted about that, Kyle. He already had like 200,000 impressions or something.
Or views. Yeah.
Yeah.
I think it'll hit about 350 by the end of tomorrow. And they've already been playing it on YouTube in Florida a lot. I've seen it a couple times. Try to skip it so I don't watch it. It costs SoFi dollars.
Sorry about that. I had to answer a message real quick. Okay. What other news did we see from SoFi recently? Tevis, you were talking about website traffic consistently rising. Was that just the
That was the thing you
similar
posted.
web stuff?
Yeah, exactly. The only other thing that I had that I covered in my video earlier today was that a Form 144 came out yesterday. I think the Form 4 is actually out right now on SoFi's IR, where Chad Borton, the president of SoFi Bank, just sold 12,000 shares. But that's strictly for tax purposes for his restricted stock units to vest. And it's been happening, consistently by other executives. And back in November, it happened by like almost the entire executive branch. So it's nothing major. It's nothing that I want to shine too much of a spotlight on, because people think that, when there's executive selling, there's like bad omens on the horizon. And that's just not true, because these guys get paid in stock as well.
I mean, hey,
People sell for countless reasons. People buy for one reason. And Noto only buys.
Yeah, but also these are also automatic sales. They're not like he's not going in there and selling. They're just
Have y'all checked NerdWallet's traffic?
No, like, do you mean like them doing 100 million a quarter? Is that what you mean?
The website traffic for January came out at the same time as SoFi, and
Okay.
their traffic skyrocketing on
In January?
NerdWallet. Pretty sure, yeah. Like
Yeah,
up
no, I
even
haven't seen that.
SoFi. Yeah.
Do you have it, Kyle, to throw up, or
I don't check the what is it called, the
on SimilarWeb?
Yeah, SimilarWeb. It's I forgot what it's up. It's up a lot though.
And what do you guys think SoFi's website traffic will be? Just as we're bringing that up for NerdWallet, but what do you guys think this will be in February now with the NBA thing?
Well, I wish we could see how many times people log into the apps and get app traffic.
So that's been a point of contention, actually, that people are curious if SoFi's website traffic does include their app logins.
How could it?
Because there's some part during the sign-in phase where you have to actually go to their mobile website to verify or something during the login phase. And so there's actually been a lot of question on if SoFi is different than other companies because their website traffic would count towards app traffic logins.
We would need to get a tech specialist on to answer that. I have a hard time believing that, but
it's something to do with the login thing. I've definitely seen a bunch of people talking about it. Regardless, it still does track whether it's mobile only. Sorry, if it's
what's the logic? Because of the two-factor?
Yeah, potentially. I'm not sure. Like I said,
wouldn't that be the same for pretty much any other financial institution?
I mean, I'm not sure. Here,
if you don't have two-factor on your financial stuff, you're probably asking for some bad stuff to happen.
What I'm seeing for NerdWallet is, maybe I can throw this up.
Yeah.
I'm not sure if this is correct or not, but this is what I'm seeing for NerdWallet on SimilarWeb. 42.4 million visits, about a 17% increase on the monthly chart for January.
Yeah, that's much higher than what they usually see.
Yeah,
look at those last 3 months. Just go down to that V-shaped thing and hover over those lines.
I did a video on that, so I remember.
This is the category. Right?
Oh, sorry.
Yeah.
Is this similar?
This would be it for, I guess, for the last 3 months. So 31 million, 36 million, 42 million.
Here's a little tip. You can use SimilarWeb Pro, which gets you just a little bit more detail. And all you need to do is have an account. They have like a free thing. It's not great. You have to pay quite a lot if you want like a real account. But yeah, you get a little bit more detail on the SimilarWeb Pro.
You could be getting 1 million viewers from NerdWallet, maybe 1 million or 500,000, something like that, coming over from them.
If we get enough articles, I guess, hey?
So, Kyle, where does SoFi go this year? What do you think we can hit?
I mean, I thought we would have held, but I guess, it's first profitable quarter we didn't held, but I'm going to say, January 1st, New Year's, I don't get the Q4, you know what I mean? I only get the Q3 earnings, so I think over 20.
Yep.
I'm still in that camp. I think we end the year in the 20s.
Yeah, I'm in the same. I think over 20 if macro is good and they continue to have profitable quarters, they get 4 straight quarters of profitability, I think sentiment completely turns around.
Yeah, I mean, you got three more earnings reports.
I think like SoFi's like 2 years behind Nubank. You know what I mean? Like not on users, but just on like where they're heading towards like profitability. Like if you look at Nubank's first 2 profitable quarters, they had like a it was like a 10 or a 20, then 40, and then they started skyrocketing on like their Q3 and Q4. Just looks like Nubank's 2 years ahead on just like earnings. And if Nubank's at 50 billion right now market cap, or 45, 2026, Noto needs 45 billion. Boom, 45 per share. He gets his bonus.
So I think
Yeah,
there's
I mean-
several things that can happen. You have the short interest, which is sky high. If you keep getting earnings beats and stock starts going up, you're going to have shorts covering. Given the fact that we are in the middle of February, there is more than enough time for some of these RFPs to finish and SoFi win them. If they do, and they can go public and say what they've done and who's using their cyberbank platform, that could be more than enough to get the analysts to understand the actual AWS of fintech play for SoFi with credible validation. That could be the key to getting them a hybrid multiple. And that could push them into the 20s in the second half of the year, probably for Q4 this year.
Do you know that guy Ram? Do you know that guy Ram, Steve?
From Bank of America?
No. On
No.
Twitter.
From Bank of Twitter.
He used to work for, I think he used to work at Lending Club 10 years ago.
He was an early investor at Lending Club.
He owns like a small teeny hedge fund, something like that. But he was basically saying that Galileo and Technisys, they won't be able to land like top 20 U.S. Legacy financial institutions because Technisys is from, a foreign country, LATAM, and he said that the regulators wouldn't like let U.S. banks like hop on the platform because like the deals would never go through because of regulations. That's what he said.
Considering they're owned by SoFi now, I think that changes a little bit.
And had U.S. clients before SoFi as well. It's not like we brought them to North America; they were in North America.
I mean, look, maybe that could be 100% true. I have no idea. My logic would be, well, they're owned by SoFi now, which is a U.S. entity, and they are going to be backed by the SoFi banking charter if it's a sponsored entity on the platform. So I don't know. I'd love to hear Anthony Noto speak about that, but it doesn't seem like he's too concerned considering what he said in the conference calls.
And then he said he signed a regional.
Yeah,
I don't get it.
You also now have like a senior member of the New York Fed, somebody who's worked with them for 34 years, now on the board of SoFi.
Yeah.
I want to talk about Temenis, which is a competitor to Technisys. Just went through some hot water. Hindenburg Research came out with a short report, all this stuff. But guys, we surpassed an hour.
I got Tev's message and I just tried to hurry up and I was doing stuff and
we're glad to have you, man, honestly.
Yeah. What we usually do here is we'll do another 20, 30 minutes. You don't have to join us for that, but we love you if you can. But we do an after hours show for the members only. And I think this time I kind of want to talk a little bit more about SoFi, funny enough, not over with the SoFi conversation. So, ladies and gentlemen, if you haven't joined as a member already, you can go down below in my chat or Tevis's chat, hit that join button, join the members group, and we'll see you guys there.
Thanks, everybody.
Post tomorrow at noon. All right. Bye, guys. Alternative Assets Weekly.